All right, well, hey there, everyone. This is Kevin, and this will be a video presentation talking about options. It'll be my introductory webinar, if you will. I want to spend, it's probably going to take about 30 minutes to get through this presentation. So if that gives you some kind of indication of what I plan on going through, it should answer a fair amount of questions for those of you that have sent me PMs, that are making posts in the forums, just about what to expect with options, how to get started with them, what they are. I mean, there's a wide variety, and there's a huge breadth of information out there and experience level. And so I want to just kind of start at the very basic beginning and go through this presentation for you guys. I would highly encourage you to take some notes, jot some notes down to yourselves, and then maybe you can either post them in the forum, in the threads, or when I do my first webinar with Mike, we can just kind of have, my vision is to just kind of have weekly kind of Q&A sessions. I'll have different thoughts and different topics I want to talk about, but just to have more of kind of like that interactive, where are you at in your journey with options? What are you struggling with? What are you succeeding with? And I think this would be a good starting point, just to not be distracted by questions, because I'll get distracted if I hear the beeping going off, or if I see people typing questions. It will be easy for me to kind of get off topic and not really get through what I want to get through. So this lesson will just kind of go about 30 minutes in length, and it will hopefully clear up a lot of questions that you guys have. Okay, so let's just get on in there. So first and foremost, just keep it as simple as you can. All right, I love this quote. If you can't explain it simply, you don't understand it well enough. You should be able to explain what it is you're trading in under 10 seconds. Why you believe in it, why you are willing to put money into something. And if you can't explain it in a very simple to follow format, then maybe it's too advanced, and it should require maybe a little bit more, maybe a second look at it. Okay, so me, how I started trading. So I am in my mid-40s. I'm a registered nurse by trade. I'm married. I have a child. I've been married to an amazing woman for about 19 years now. We have a freshman in high school, and yeah, you know, it's just I'm a registered nurse. I've done that for the last 20 years. It's all critical care, emergency medicine. I've been a flight nurse. I've done a lot of areas in my career that have absolutely shown me the worst side of humanity that you can imagine, but also the best side as well. So I'm pretty passionate. I love helping people. I'm excited. I love life, and you know, I think that when it's all said and done, and you're on your deathbed and you're looking back over your life, you really, I want to be looking back knowing that I did everything in my power to help as many people as I can. And this is, you know, just one of the steps, and it's, I guess, maybe the next evolution, if you will, of how I can help people and share some of my knowledge to make an immediate and direct impact in your own life, in your financial life. Okay, so that's me. That's a little bit about me. I got into teaching back in 2011 and 2012. I started documenting some of my trades using Camtasia, and what I discovered was that I was able to go back and look at trades and hear myself talk, and see what I was thinking at the time. And sometimes that'd be days or weeks later, and it was just amazing how that different perspective, it made me look at the market a little bit differently. So it started out, I was just documenting my trades. I was journaling what I was thinking, what I was looking at, why I was making adjustments, etc. And so I sent a couple of them to my brother who lives in California, and he was like, Kevin, this is fantastic, man. You're like really able to articulate clearly what it is you're doing. You know, you should start kind of posting some of these. And that was kind of how it took off. I think I posted one of my first videos here in this thread a few years ago, and it's, you know, it's still a work in progress. I feel very strange sitting by myself in my living room right now talking to a mic and nobody's here, but I hope I'm improving at it, and I'm always trying to be better sharing the knowledge. So any feedback I'm always open for. If I can, you know, make it simpler, make it better, I'm open for any suggestions. So and I'm just passionate about sharing this. You know, I remember vividly how overwhelmed I was, and I want to try and help alleviate some of that emotion, if you will, for some of you guys that are interested in this but really just don't even know where to begin. Okay, so options to an FX crowd. What in the world? Why would I even think that FX traders would want to know about options? And well, I'll tell you, because it's trading, and what appeals to all of us is learning how to take financial control of our lives and get that independence and that freedom and that ability to generate. I mean, come on, let's face it, trading is not physically difficult. It's mentally overwhelmingly hard, but physically, I mean, anybody can click buttons on a mouse and go buy a computer and open up a trading account. But the bottom line is here, it's all trading, right? And so whether it's trading FX or futures or bonds or equities or commodities or gold or real estate or cars or whatever it is, it's trading. We're wanting to buy and sell something and make a profit when the transaction is over, right? So options, I feel, are just, it's a different vehicle, a different way to maybe look at the markets, and I don't think it's any better, any worse. It's just different. For me personally, I think it's the best thing ever. I enjoy them tremendously. I think you can create trades that are absolutely impossible in a directional market, and that's the attraction. That's why I love them. So, oh, and the market just closed. There you go. So, I think that where spot FX and directional type trading, you can absolutely still do that in an options bias with an options setup, but what you cannot do with FX or futures or directional, you can do in an options platform and in an options account and using options. And so you can, you know, you can start out trading with a directional opinion, and if you're wrong, you still have that ability to convert something into a non-directional opinion or vice versa. It just offers a lot more flexibility. And so I hope that you'll be able to see that, and over time be able to understand that, you know, I'm not saying that this is the only way and it has to be. No, that's stupid. That's ridiculous. But I am saying that options will offer a lot more flexibility than just directionally straight, you know, long stock or short futures or you know, anything like that. So let's just, you know, get right into it. What is an option? An option, okay? So an option is specifically, it's the right, when you buy an option, all right, it's a legal binding contract. So you have rights. You also have obligations if you are selling options. It's a legal binding contract, all right? That's exactly what it is. And each option will control 100 shares of that underlying. Okay, so right off the bat, sometimes you might get hung up on, okay, well, wait a minute now. It's considered a derivative. So all that means is it derives its value from something else. And that something else is an underlying asset. Okay, it can be anything. It can be, You know, that's one of the terms that you absolutely must know in the very beginning. You need to know what the underlying asset refers to. What is it all about? Other terms, you need to know what option types are. We have calls, we have puts. I'll show that in a few minutes here. There's a strike price, which is the option that is being traded. There are days to expiration, so there's that time component that we're talking about. And then there's also an option price. That's the actual cost to buy or sell the option, okay? So I'm going to go through each one of these 5 bullet points here by themselves, but just know that these are, in fact, terms that you have to know right off the bat, first and foremost, okay? So that underlying asset, it can be anything. It can be a future, it can be an index, it can be an equity, it can be currency. It's anything that controls another asset, okay? If you think about the options, you know, an option is it's a contract, as I put in a PDF a few pages back. You can use the coupon analogy, if you will. I mean, that has a predetermined price, it has a predetermined time, it has a predetermined amount, it controls an underlying asset. In that example I used, it was a pair of shoes. So the underlying asset is just what your option is actually controlling, okay? So when you have the different types of options, you just have these are the only 2 types. You have calls and you have puts. That's it, period, end of story. You can only trade calls or puts. And while calls, if you buy a call, you may want the market to go up. Well, if you sell a call, you want the market to go down. All right, it's exact reverse of that. Same thing with the puts. If you buy a put, you want the market to go up. If you sell a put, if you buy a put, see, look, even I can get confused. There's many elements, there's many layers, and so just I urge you, just take your time. Just read about this. There's a ridiculous, endless amount of free education information out there. I can get you to the strategy level. I can get you to the making the money part, but I can't get you to the understand the terminology and the mechanics and the introductory layers of it. That's going to be on you. You're going to have to just spend the time reading, asking questions. The effort you put into this will absolutely determine the outcome that you get. All right, so you've got calls and you've got puts. These are the only 2 types of option types that you can trade. And a call and a put, they can be traded simultaneously, they can be traded independently, they can be traded layers apart as far as strike price or expiration times. There's many different ways you can trade calls or puts. But the bottom line is, a call and a put both control what? They control an underlying asset. And that underlying asset can be anything. In the case that I have been showing, I am showing you the Russell 2000, which is it's an index, right? It's an index, it's a basket of stocks of 2,000 stocks on the small cap index, and you can trade this on the SPX is another index. That's the top 500 companies. You can trade it on crude oil. You can trade it on gold. You can trade it on the Australian dollar, 6A. You can trade basically options on any underlying asset, okay? And these options are going to be either calls or puts. So let me just bring over the platform here just for a second. I know I've shown this to you guys before, but look at this right here again. This is all broken down. You have calls on one side, you have puts on the other side. Let me make this, there you go. So you've got calls on the one side, you've got puts on the other side. You have got many different expiration weeks. You have got many different expiration strike prices. And the calls and the puts are what are being traded, okay? So strike price, that is the only price that stays constant throughout your whole time of trading an option. And I'll just turn this back on here. This is the IWM. This is the ETF of the Russell 2000. And if I just open this up here, you'll see that all these strike prices, they stay consistent. If I buy a call or a put at the 125 strike price, everybody is going to know. They're going to, if you're trading options, they're going to ask you, what strike do you have? Okay, that's it. And I have the 125 strike. Okay, do you have calls? Do you have puts? Okay, well, I've got calls. Do you have puts? Okay, I've got puts. So the strike price is what stays consistent, and that correlates with whatever the price is at the market. Okay, so right now the IWM is at 125.65. The 125 strike price is at the money. That's what is being referred to as at the money. So that right there is what you need to understand about what the strike price is. It stays constant throughout. It does not change. You have days to expiration, all right? You have every single option is going to expire. Either you're going to expire at worthless or for profit. I talked about that in the Friday video that I posted up. I had options that expired and they were profitable, so they expired and I made a profit on them. You have monthly options, you have weekly options, you have leaps, you have all these different layers that each one of those you can see, you can trade options that expire every week. These options expire in 4 days. These are the weeklies. The 100 right here, you're controlling 100 shares of the IWM, okay? These options are going to expire in 11 days. These will expire in 18. These will expire in 25 days, and these are the monthlies, okay? The third Friday of every month cycle, you have options that will expire. The third Friday in June, these monthlies expire. The third Friday in July, etc., okay? Now your leaps are ones that are just way, way, way out in time. They're super far away. A very popular strategy that you will find on the internet is buying leaps and selling calls or puts against them, all right? I am not a big fan of that. I will be able to go in much greater detail why later, but just understand when somebody talks about leaps, that's what they're referring to. Options that expire a very long time away. 641 days away to be exact, okay? So all these terms, again, I'll just go back to this right here, okay? You have an underlying asset, you need to know the option type. Is it a call or a put? You have a strike price, you have days to expiration, and then last you need to know about the option price, okay? So the option price, that is just the perceived value of what the option actually is trading for. If you refer back to the analogy of buying a pair of shoes, are the pair of shoes $50? Are they $500? Are they $5? So that value is, that amount is placed on two things, the intrinsic value and or the extrinsic value, and that price changes when changes occur in the market and volatility. So when the market is becoming very impulsive and reactive and volatile, well, when more uncertainty enters the picture in this volatility, meaning it's more volatile, guess what happens to the price? The price goes up because there's more uncertainty. So you have a lot more value that comes to the picture, okay? So just understand, again, this introductory webinar, if you will, is not intended to be very in-depth. It's to give you the first step to see if you want to take the next step, or the third step, or the fifth step, or the 1,000,000th step, okay? And so I'm not going to spend a lot of time going into too much detail on these types of values. You will absolutely find those in the tutorial lessons when the new site comes out, but this just kind of gives you a good quick introduction into some must-know terms, okay? Okay. Sorry, I had to take a quick little sip of water. I cannot believe I've already been talking for 20 minutes. You guys, I thank you for your patience listening to this. And I'm so sorry you had to just listen to that. All right, so let's just keep moving forward here. All right, so strategies. What strategies? All right, so how are you going to make money? How can you? I got the basics. Great, fine. I know what a call and a put is. Wonderful. Keep going. I know what intrinsic and extrinsic value is. Great. You know, I know about volatility. Great. How can I make money? And I'll just tell you straight up right now that there are too many ways to make money trading options. And that is probably the main factor, and that in and of itself is probably why most people, most traders that try and trade options, they get overwhelmed, they get frustrated, they get confused, they get just, you know, oh, here we go again. It's just another venture into losing more money. And so, you know, I want to keep things as simple, as basic, as elementary as possible. And I'm not going to say it's going to be easy, but it will be very simple. All right. So all I want to say about a strategy is if you can't explain to somebody else, you know, think about your next door neighbor that maybe doesn't know anything nor cares to know anything about options, and you're out on your front porch and you're having a conversation talking about your grass or the yard or the weather, whatever, and you explain to your neighbor, you should be able to explain to somebody that knows nothing very quickly what it is that you're doing, what an option is, right? And if your strategy takes too much time, if you can't break it down into just a couple of quick sentences, and if it takes, you know, an advanced math degree to understand your strategy, that's probably too complicated, all right? And now that's not to say there are not complex strategies that make well, you know, a good return, well amounts of money, but for now, just understand that the simpler the strategy, the better. All right. So some strategies for beginners right off the bat are just straight up long calls and long puts. All right. Just get you introduced to buying options. Buying a call if you want the market to go up. You buy a put if you want the market to go down. Period. End of story. That's it. If you're right, great. If you're wrong, great. Control your risk with your contract size, with your position size. And that's the best way to get started. After that are spreads. And all that is doing is you are buying and selling options at the same time. Sometimes they're in the same month. Sometimes they're in the same strike. Sometimes they're in different months. But when you're able to start buying and selling spreads, all you're doing is you're using both calls and puts at the same time. Sometimes you're using two different layers of calls. Sometimes you're using a layer of calls and puts in different months. So the spreads just mean you're buying and selling something at the same time. So that is the best way to get started without getting too complicated and too overwhelming. And the various types of spreads, you have debit spreads, they're going to cost you money. Your credit spreads, you'll take in a credit. You've got your time spreads. You've got butterfly, condor, and very complex advanced level spreads. So I'll just briefly run through. If you have a long call, if you buy an option, you buy a long call option, you have a defined amount of what the option will cost you at the very beginning. You have an unlimited profit potential, which is one of the attractors, okay? Buying calls or buying puts into earnings or into announcements, okay? Yes, it works very well sometimes. Is it consistently able to be duplicated on a long-term consistent basis? No, absolutely not. So it should represent a small part of your account and of your portfolio, but just understand over time the consistent winners in options are not people that are buying long calls and long puts, all right? But that is the best way to get started into using options and trading options, because you have defined risk, you have potential to make good profit, and they're very simple to execute and very simple to trade, okay? So long call, you want the market to go up. If we come over here, if I show you that same risk profile, let me delete this. Let's just say I add a simulated trade. If I want to come right here, and let's say I want to buy, I'll simulate buying a call. Well, there you have it. It's going to cost me $162. I have unlimited profit potential to the upside. And this right here, the x-axis is my price action. And if you look at a chart right here, let's just go Let's get rid of all those, remove all drawings. Okay, so right here, if I see that I want something to go, let's say I'm playing a test of support here, I want to buy right at 124. Well, if I came right here and if I wanted to buy a call at 124, it's going to cost me $290, and I've got unlimited profit potential to go all the way up here. If it goes up to 134, I make $700. I make $800. I mean, so you see this risk profile. So again, this is important to begin getting familiar with. Long put is just the reverse. You want it to go to the downside. Okay? Your spreads are going to be either debit or credit spreads. And again, you have defined risk. The difference with your spreads is you have defined profit potential. You do not have that unlimited profit potential where it can go up to, you know, infinity or a 5 standard deviation move, or you know, big announcements cause your option to gain or lose value exponentially. Well, in a spread, you have defined risk, you have defined profit. All right, so a lot of times traders choose to utilize that better, and especially in the beginning, because you can construct spreads that are very easy to manage, have defined risk, and have defined profit. So again, it's very similar to, you know, a directional FX trade or directional futures trade. You have your stop, you know what you want to make, you have your first trouble area, you have your targets, so you can use the options in the same exact manner. And you know, a bear put spread, same way, be used as a debit or credit. And so you can create these spreads using just both options to take an opinion on the market or not take an opinion, have a non-directional bias. All right, so I will be able to show you absolutely both of those styles, but it's important to just understand that terminology of what they actually are. Okay, time spread, this is just a calendar time spread. All that means, okay, so again, I'll delete this, so we're starting fresh. Let's just say that I wanted to analyze buying a calendar spread, and that is a time spread. That is the risk profile that you get. So you have, right off the bat, you can immediately see, all right, well now, the green solid line is my area of profitability between 123 and 128. If the market stays in between that range, I will make money, period. Okay? The reason that is a time spread is because you are selling one option that expires in a different time than the second option. Okay? So as I talked to just a few minutes ago about how these options expire in different time layers, weeks apart, months apart, in this factor here, you know, 2 years apart, all the time spread, all this means, the time spread just means that you are buying one and selling another, just like a debit or credit spread, but your options are traded in different calendar cycles. Okay, that's all that means. Butterfly spread, same thing. It looks very similar to the calendar spread, except the butterfly spread, you are buying and selling options at different strikes, yet they are in the same expiration cycle. So if you see right here, let's go to June that expires 60 days from now. If I wanted to analyze buying a butterfly trade, again, you have the same expiration cycle, you have different option strikes, all right? And buying and selling all of these options is going to cost you $5. It's going to cost you, it's a net debit, so butterfly spreads can either be debits or credits. They are typically a debit out of your account. Okay, and then last, another type of spread is a condor spread. Condor spread just consists of taking a similar type of setup and you are coming way out of the money. So we'll say we come here, we are analyzing selling one, We are analyzing selling another. And what the risk profile that gives you is, you will see this green solid line. You have a profitability range between this point and this point. Let me just do this right here. You have a profitability range between right here and right here. And in exchange, you are going to potentially make $14, and it is going to cost you $86 of a margin requirement to construct that trade. So it costs you $86 of margin. So in theory, that is the maximum risk that you are risking to potentially make $14. That's horrible. That's terrible risk to reward relationships. However, it is something that does hold a place in your trading arsenal, and you need to be aware of how they perform. Okay? So again, let me just reiterate, this is only meant to be a quick introductory webinar into what options are, how you can use them, what I think is good for a brand new person just to start getting exposed to. And these are all the various types of spreads. Okay, so let me just recap this up and try and get this out of here in the next five or 10 minutes. I'm really sorry. I'm trying to go fast, but not so fast. I mean, this is important stuff, right? You guys, if you're spending your time listening to me talk about this, you obviously want to get some information and value out of it. So I want to go quick, but I don't want to sacrifice content in the process. Okay, so options, they're the most flexible, versatile. Don't get intimidated. Please just go slow. There is that steep learning curve. There really is. All right. Don't please give up. Please just hang in there. If this interests you, if this excites you, if you have some desire and your mindset is that, you know what, I am all in no matter what, I am going to learn this, that is what you need. Okay. If you are interested in this, just understand you can absolutely learn this. I promise you, I assure you, all right? But it's not going to happen in a weekend seminar. It's not going to happen in a month. It's not going to happen in 3 months of paper trading, so now you're ready to dump $500,000 of your retirement account into this. No, it's going to take time. Put in the time, put in the effort, be disciplined, and I assure you that it can be the probably best thing you've ever experienced in your life. In my opinion, that's me. Okay? So just don't believe it. I mean, they're not too complicated. There are many moving parts to them. Just like Jim has reiterated from day one, back in his very first post of his thread, just sim trade and demo trade this. You have that capability to where you don't need to risk any money while you're learning this out in the process in the beginning. Okay? Options, they've been around since 1975. You can use them as hedges on big, massive portfolios. They're regulated, they're protected. They are now used for, monthly income, month account growth. I mean, when I say that it's very simple to make 25% a year, I promise you it is. And that's, a lot of people are using options specifically for that, for monthly income and to grow accounts. So, what do I think? 3 more slides, guys. 3 more slides. Hang in there. What do I think are the 5 reasons why option traders fail? All right. So I'll put these down right here. You don't follow your plan. You might not even have a plan. You might not even know how to make a plan. And yet, if you don't know in advance what you're going to do when the market gets to a level, you're not going to make it. You absolutely are not going to make it. Or you have a plan, but it has so many moving parts to it that, again, I'm just going to always go back to that. Keep it as simple as possible. The simpler, the better. And so I think that's going to be the second reason. The last one, I think, or the third one, you try something, well, calendars are stupid. They don't work. Well, let me go try butterflies. Oh, butterflies are dumb. Those don't work either. Well, then it's got to be condors. Condors are the best thing ever. So you do that and you get burned on a couple of those, and now all of a sudden condors are the devil. You cannot jump around from one thing to the next, the next, the next. trying to shortcut that learning curve. It's a steep learning curve. It's going to take time, all right? Trading too big, obviously, that's going to, we've all been there. We've all traded much larger than we should have, and you pay for it. And options especially, you will discover, are very simple to make 2 or 3 or 6 months worth of, pretty consistent profits. And then you get kind of full of yourself, and I speak from firsthand personal experience here. So you know what, man, this is easy. I'm going to go ahead and ramp this up tenfold, and you take a loss that wipes out a year's worth of gains. All right, that is not fun, and it is depressing, and it is psychologically damaging, and it causes you to take a lot of steps back. So trading too large really cannot be underestimated. So then last, just being impatient. It's going to take some time. It's going to take diligence, effort. I feel like I'm a broken record right now, but I think these are probably the top 5 reasons why option traders fail. Maybe even I could eliminate and take off this, options. I could take that word out and just say top 5 reasons why traders fail. I don't know. Maybe, but we'll just leave it like that for now. 3 learning curves, and I think that each level is going to have different obstacles. Maybe you're already past level 1, and maybe you've got all the language, the terminology, you've got the basics under your belt, so you're done with this. Cross that out. I'm ready. Teach me a strategy. I want to know. Show me how to make money. With each subsequent step you get through this process, you are going to have to reintroduce yourself to that learning curve. And it gets steeper each level you go down until you get to the end of where you've got a couple or 3 strategies that you're working on. You're making consistent profits with them. You're making money. You're learning your platform, and you are now managing kind of some complex spreads, or maybe not, maybe just still some simple spreads. But each step along this process will have a learning curve attached to it that you absolutely have got to respect. And I give all the credit to this to John Locke, who is a mentor that I had the absolute pleasure and thrill of spending some time learning from. And I'll tell you, there's a lot to be said just about respecting that element and that process of getting through what it takes to be a successful long-term trader. All right, so that's kind of all I got here, and just these closing thoughts. This has been my tagline on the bottom of my signature panel ever since I've been in this forum. It's pasted above my computer. This really resonates with me, not from a trading perspective, but just from a life perspective. When you go through things in life that really try you, you've got to always take note and always be determined on what it is you're trying to accomplish, what's your goal, where are you going, and when you focus on that, then you know what, it's not a matter of how am I going to do this. It's just a matter of, okay, how long is it going to take? And really, I just kind of want to close on that note, because I think that we all go through struggles, we all go through challenges in our life, and whether that's a health issue, whether that's a financial issue, whether that's a personal issue, whatever the obstacle is, you know what, just understand that I truly believe that you can get through this, you can learn it, I can teach you, I can help you, and I'm excited to show you that next layer of that onion. Okay, so questions, write them down. We'll be doing a webinar, maybe kind of like a follow-up to this. I do plan on doing weekly webinar sessions, and just really getting deeper into this to show you guys kind of what I'm about, what I want to show you, how to trade these, and how to make safe, consistent, and profitable trades using options. Okay, so thank you so much for listening, everyone, and have a great afternoon. Bye-bye.